In today's episode with Dan Gerhold, we are touching on the commodities markets. What is happening in the world of the cattle markets on the board? Dan covers everything that we are seeing right now. We talk heavily about fats and feeders today. Those are our main topics. We're breaking all of those down, what Dan is currently seeing, what we can anticipate for the rest of the year. Then at the end, we also touch on the grain markets and hog markets as well, and how those are impacting demand for beef. Without further ado, let's go ahead and hop into this episode. Dan, but before we do, if you could take a second to like, subscribe, rate, and review this episode, we would really appreciate it here at the team. Now, without further ado, let's go talk to Dan. Dan, welcome back to the podcast. How is life in Iowa treating you? I feel like those are the exact words I say every single week. I maybe need to switch it up a little bit, but how's life in Iowa treating you?
It's always great in Iowa. It's heaven. I think there's a movie about that. But yeah, life is great up here. Harvest is full swing and a lot of people wrapping up beans and onto corn, and yeah, good times. Good time of the year. My favorite time of the year.
I love to hear it. I love to hear it. Well, how are the markets going this time of year? Are they still making it your favorite time of year?
A little stressful. I mean, feeder cattle made some new highs yesterday. How about that?
Yes.
Kind of shrugging off everything going on in the fat cattle world, just punching through to new highs. So that's certainly exciting for all the cow-calf and backgrounders out there. For the feed yards, it's a little bit nerve-wracking because now we're looking at higher price replacements again. So that's interesting as we watch cash fat cattle go down and replacement cattle to put in the feed yards go up. So we're going to have some tighter margins, it looks like, in 2026, but we'll see. There's always time to correct that, especially now. Anything you place now, you're going to be selling as fat during the middle of grilling season. So optimistic, of course, for that, as I usually am. You get out there to March, April, May, June, and it's a great time of year to see the consumers really go through those middle meats. So let's hope those 250 break-even cattle we're placing right now can make a little money out there.
Yeah, definitely. I think that is a hope and prayer for everyone in this market and what we're seeing. We love to see these highs, but at the same time, it's like, let's hope that we can catch that high on the other side of this as well.
Absolutely. Yeah. It's honestly, the fat cattle trade, as far as futures are concerned, has been pretty ho-hum and boring. Still stuck in that wedge. Yesterday, it tried closing out of it. It's right there. It wants to bust out to the upper side. Got a possibility of it today. If we see a bust out, you're probably going to go to the old highs up there at 244 in the D's. That would certainly be exciting, but at the same time, we've got to sit back and see what's truly going on here, and we've got negative basis now. So it's been a while since we've seen some negative basis in the fat cattle world. It used to be pretty normal for this time of year, and in fact, I can make an argument that negative basis normally exists during the long-term bear markets, but I don't know that I should be saying that when we're at the top of all-time highs. So nonetheless, negative basis typically leads to deliveries against the board. So we should start seeing those roll in here this week, depending on the bid the Packers come out with. The call right now is for cash fat cattle in the country to be steady at best. I'm in that same camp. I think steady is possible, especially with boxes leveled off so far this week. I'm not saying demand is right back where it should or normally is, but it's that time of year. We've talked about it how many times. You're not going to see a lot of middles, a lot of steak demand, and the retailers, they still haven't dropped their prices. I've been watching the features. That 20 pounds or $20 a pound for a steak hasn't changed, even though wholesale prices have dropped. Retailers are improving their margins like they normally do. So I don't see a huge amount of volume that we're going to plow through and clean up all this meat on the floor that the Packers are holding right now. So it's a little bit concerning. At the same time, fats follow feeders very, very often. Once again, you want to talk negative basis, look at where that feeder cattle index is. That's mid 360s, and we're trading 369.5 on the board. So what's going on here? Well, plain and simple, the news came out again that they found screwworm down I believe, 170 miles from the border again. So that gave traders the, I would say, confidence to put long positions back on. We've seen open interest go up in a rising market. That's very strong. That's healthy for a bull market. And you're setting new highs. So now the question becomes, is cash going to follow the futures higher? So you're putting premium on the board. The cash cattle in the sale barns have been steady, a touch higher, but not as high as the board. So are we going to see the cash feeders start ramping up? There's a case that could be made. A lot of people, a lot of sale barns I talk to say a lot of cattle moved early this year. People didn't want to miss out on the market. I mean, if that happened, we should hold these feeder prices then, at least through the fall. Another thing I'm seeing and hearing from different people is, there's a lot of farmers that are interested in walking their corn to town this year instead of hauling it. So if that happens, once we get harvest wrapped up, should be a lot of farmers sitting in the sale barns wanting to buy cattle. So that might keep prices high too. So, it's hard to kill this bull market in the feeder market the way, every opportunity we've had to wreck cash feeders, we can't. The board would lead it lower. This thing would look like a train wreck, and all of a sudden, cash feeders in the barn would stay steady. Now, all of a sudden, the board's like, okay, we're too cheap. Let's go lead the way higher. So now the question is, will the feeders in the barns follow? That's the big question.
Yeah, definitely. How would that just impact the market and a broader standpoint? So if the feeders in the market, like in the auction houses, do follow, how does that then trickle back to the board and what we're seeing there?
That gives it, I guess you'd say, sustaining power to keep it here. Like I said, open interest is going up in a rising market. We don't have our commitment of traders report right now with the government shutdown, so we don't know what the funds are doing. But volume has been light, so there hasn't been a lot of trading. But the fact open interest is going up in a higher market, when you put 3-4 on a day, that's a bull market. That's what you want to see in a bull market. So it's all about, a bull market needs to be fed every day, right? We've all heard that saying. Well, right now, you gave it some big news on Monday. To go along with it, you've got open interest going up, so new traders are coming to the feeder cattle market. The last thing you need to really sustain this market is those feeders in the barns going higher. If you don't have that, then I'm afraid the board's going to see a decent sell-off the closer we get to the end of October and when we have to settle up with that index.
Is there anything else that is being affected right now by the government being shut down in your world of things other than that report that you were just talking about?
Just different reports they're not coming out with. A lot of the day-to-day data that we watch, open interest reports, obviously that's not done by the government. Your wholesale meat prices, that is, but that's still coming out. A lot of the data, the kill numbers, the important things, those are still coming out. I believe there was a WASI report scheduled for today that got canceled. I believe there's a cattle on feed report scheduled for next week, Friday. If it's like the WASI, they're probably going to cancel that. That is a bullish looking report, looking at early estimates, low placements, higher marketings than the placements. So it's bringing the cattle on feed number down. But inevitably, if we don't get that report, we're kind of in the dark. Not the end of the world, in my opinion. I don't mind it. So other than that, though, the government shutdown really, it's not phasing cattle. It's not phasing commodities. I think I looked at a stat. Most government shutdowns actually are bullish for commodities. So it's just a matter of every trader out there anticipates eventually the government's going to open back up. And I guess everybody gets their back pay and moves on with life. So it's not a big deal yet.
Yeah, exactly. that caveat at the end of yet. Hopefully it's we can figure something out and it's not 39 days or 33 days or whatever it was in 2019 all over again in one of those situations. So anything else in the markets that we need to hit on today? Any other highs, lows, things that are standing out? How are grains doing, and then how's the hog market holding up as well?
Yeah, grains are trading sideways for the most part. Pretty standard stuff during your harvest pressure. You got a lot of selling going on. They're not falling out of bed. They're not going to new highs. It's just kind of ho-hum. Wheat looks like it looks like a market that wants to go nowhere but down. I still want to be optimistic. Let's turn this calendar and get into a new wheat crop, start trading something new. But so far, there's just nothing to trade. Corn, I still think has a possibility of going to that 440 number here post-harvest. The way the weather is in the Corn Belt, I would like to make an assumption here in about 3 weeks. There's going to be a lot of people wrapped up with harvest if we stay dry. It's just been a good harvest, going fast. The weather's cooperated, so it could be a year where a lot of people are done by November 1st instead of December 1st. So that's one thing. If we get that harvest wrapped up sooner. Before I go to that, a lot of these corn moistures are coming in lower. Last week was a big dry down week, so a lot of corn dropped 5-6 points last week. If people are wrapping up beans and just starting in corn, and then they got 2-3 weeks of that, are we going to see something similar to last year where we've got a lot of corn coming out of the field at 12, 13, 14% instead of that 18, 19, 20? Well, that affects yields. So if you look back at last year, the USDA had to revise their numbers lower, and one of their excuses was, well, it came out of the field drier. So maybe they do a repeat of that. I don't know. But long story short is grains are going to trade sideways here, in my opinion, for the next 2, 3, maybe 4 weeks. And then I guess I would look for some post-harvest rally there to take us up to, that 200-day moving average. So the hog market, it's not a ball of fire. It's actually a little bit concerning. I don't like the formation on December hog chart. It's actually a setup that looks like it could push us lower. The cutout is just kind of ho-hum, very slowly trickling lower. I still want to believe there's that hole out there in December because we saw some disease pressure. So if we can hold some key support levels, I think we got a shot to do another counter-seasonal rally the closer we get to December. It's just a matter of right now there's plenty of hog, the slaughter's high, weights are high, there's plenty of product, and at the same time beef, plenty of product there too. So it wouldn't surprise me if both beef and pork products see some more selling pressure as far as wholesale prices, and that's going to reflect poorly on the hogs here for the next, I would say, month and a half, probably a full 2 months.
Mm-hmm. Awesome. Anything else that we missed within the markets today that we need to touch on before we wrap it up?
The last thing I'd probably throw out there, Lauren, is a lot of talk about beef demand and a lot of wondering, have we finally dipped into the pockets too hard into the consumer's pocket? That's a great question. Well, it's kind of a double-edged sword. So if you look at domestic production, drastically lower, a lot of that has to do with the cow kill being drastically lower, as well as our slaughter pace on fat cattle being lower. So that's dropping domestic production. Then you have to factor in the imports. Well, that's all your lean and your grindings. And then take out your exports. If you actually combine all that, we're throwing more beef in front of the domestic consumer than we have in the last 5 years. And they're taking it. It's pretty incredible how beef demand has really, I would say, drastically gone up compared to what it used to be. A lot of those, high diets, high protein diets, those are the ones, they're doing a lot of good. The consumer they're in love with beef, right? The other thing to go along with that, and the reason why beef got so high to that 410, 417 number this summer, was because those slaughter numbers were so low. Well, okay, so if you kill, let's just say 20,000 head less a day, now all of a sudden you have 40,000 less rib rolls that day available to the consumer. So we prop up that beef price because of those middles. And then all of a sudden, oh, hey, we're throwing more burger in front of you. So it's a double-edged sword. It's a tug of war. Call it what you want. I could say that we are going through more total pounds, but now that prices are higher on those middle meats, we're seeing the demand slow for those, but it's also part of that time of year when it normally slows. So we have to be forward thinking in this business. What is it going to be like around Christmas? Is the consumer going to be able to pay $20 a pound or more for that prime rib? Once we get past that, then the next thing we have to look for is spring grilling weather. So that's the big question I think is on all of our minds. In the meantime, I don't expect beef to be a ball of fire. I think eventually we probably build a base here. I want to say it was at this 360, 365 level. I'm optimistic. Until the retailers drop their prices, though, I cannot say confidently that that's the case, though. So, but either way, we're making a great product. Americans love it. Demand is still good considering how much beef we're putting in front of them at these prices. Let's just hope we can squeak by, stay above 350 all the way until we get to, March, and then hopefully do another rally, up around that 400 again.
Yes, precisely. I think that is what we are all praying for right now as we go into round out the year and finish out the rest of 2025, which is crazy to even think about the fact that we are already in October of 2025 and we're talking about rounding out the year and pushing into 2026. So, absolutely. I could not agree with you more on any of those sentiments, Dan. Thank you for your time today and your insight on the markets and everything else that is going on in the world of commodities these days. So, as always, to all of our listeners, thank you for listening to another episode of the CattleUSA Daily Podcast. We will see you all next time on another episode. Have a good one, y'all.